What's going on, everybody? It is Tuesday, August 15th. Half the month gone. It's funny because when I was living in New York, I used to hate August because it would be that month before fall, and it would already, for me, kind of be like the summer's over. You could even, in New York, and if you live on the East Coast and the Northeast, you could feel the change in the atmosphere. I mean, it's still summery, but then you get those moments when you could almost smell it, like the change in the atmosphere. Anyway, I'm out here in Southern Cal. It's beautiful. All right, first of all, I want to just say that I've been getting a lot of very, very nice complimentary comments and emails from all of you. And I just want to tell you, I really, really appreciate it. Thank you very much. It just makes me want to continue with this channel and with the education and the information that it provides. So keep it coming, and don't forget also, just let me mention that if you like the videos, please click like and subscribe, because that helps a lot with the channel and the growth of the channel. So if you go back, and I mean you could go back like months, I said that the first week in August would be the top in the market, and that still holds today. And nobody's able to tell you that, and it's not because, I'm some gifted guru or have a crystal ball or anything like that. It's because I'm trying to impress upon you how impactful these fiscal flows are. And you have these quarterly, additions and drains, and if you follow that, I mean, you have a pattern right there. For those of you who like the day trading or the short-term trading environment, you have a pattern right there that you can play off of. And it's very, very predictable, and it's very, very important to these short-term swings, meaningful to these short-term swings. I'm sorry, you don't have to look at charts, you don't have to look at headlines. As a matter of fact, those things, like when I was a floor trader, we used to love looking at charts for the opposite reason of what maybe many of you, maybe not you guys, but other people look at charts. They look at charts like, oh, it broke a line, or it made a new low or a new high. We'd be going against that as floor traders. We'd be going against that for the very short term, because we knew where the stops were. I've done many videos where I used to explain my days on the floor, where I used to say, it was really in our interest as independent traders on the floor to get to know the brokers in the pits and have them tell us what's on their book in terms of orders. So we were able to jump in front of that. And I've equated that in recent videos that I've made to the modern day now. It's the algorithmic traders, these computer-based traders that they put their servers like at the New York Stock Exchange or the Mercantile Exchange in Chicago, and maybe you're talking about nanoseconds of a difference in front of when the orders hit, and those guys, they see the orders and they jump in front of it. So it's a technological change from what we were doing as floor traders, back in the day. Anyway, I'm not into that kind of trading, and I don't have the resources to do that in terms of setting up computers and this and that and servers, and I don't need it. But what I'm saying is that if you have an understanding of these quarterly flows, and if you're interested in short-term trading, which I don't advise, but I'm just saying, if you're interested in short-term trading, nothing is going to surpass this. You will have the edge on everybody, because what are they using? They're using headlines, they're using, chart formations, they're using, I don't know what, but I mean, this is real stuff. Okay? This is real stuff. This is like a propellant for the market, or it's a drain for the market. And it's just, that's what's going to happen. And there's no amount of headlines or statements by officials or central bank. There's no amount of that, or geopolitical. There's no amount of that that is going to, at least in the short term, take away from these flows. So you have that. I've given that to you. And by the way, for those of you who want to delve into it on your own, like that guy who said, "Hey, Mike, I watched the video. Now I know everything. I'm so happy. My videos are so informative. I should charge like $50,000 for a video. It's $99. Yes, they're still available. It's still available for $99. But you still have to know what, for me, I think what's important is you still have to know what the bigger macro picture is. You always have to, because again, I go back to an analogy that I've used so many times in the past, which was the mariner, the sailor out on the open ocean without any landmarks. Okay, how do they find where they're going? How do they determine where they're going? You know, they used to use stars and a sextant, an instrument that would locate the stars and give them direction, and they would see it on a map where you're going. Well, our locator, our star pattern, whatever you want to call it, is the overriding fiscal flows, like the big picture. I'm not talking about these cyclical quarterly drains and additions and drains and additions. It's fine if you want to use that. I'm not going to call you out on that. If you want to use that, that's fine, if that's your thing. But really, you should have 2 layers of investment. If you like to trade, if you like to just accumulate, then you really only need 1 layer, and that's the big, like I said, the overarching macro picture. That's all you need. If you like to be more active and take advantage of these, these seasonal, or I should say cyclical patterns, then you have 2 layers. You have 1 layer which, you look at these quarterly flows, and again, you're going to have quarters where there's going to be additions, like right now when we had the quarterly interest payment today, which by the way was like 51 billion. We'll see it on the Treasury statement tomorrow. And then you're going to have the drains, like coming up September 15th, December 15th, all right? These quarterly drains. And they're absolutely playable. And the funny thing is, and I find it to be fascinating, that nobody pays attention to this stuff. And when this stuff produces its effect, whether it's a bullish effect or a bearish effect, it's always attributed to something else. So like, here's the fire over here, right? And they're all looking over here like, what's going on? Oh yeah, I'm having a glass of wine. And I'm just like, if you stand back from that picture and you just observe, it's really funny, because they're all looking over here, and like the real thing that's happening is over here. And it's not because I got some crystal ball, or I'm some like guru forecaster, magician like David Blaine. No, I'm explaining to you guys, and you think about all the books and all the courses and all the pundits and the hours and the hours and the hours and that was spent on market prediction, and it all comes down to this stuff. And yet nobody is paying any attention to this stuff. So it's a fascinating thing. It's comical. I find it to be anyway. I don't know how you think of it, but I think it's comical. And it's right there, like on a silver platter, given to you, where you could run circles around these guys. And I'm talking about the highest levels of Wall Street. And believe me, folks, I've been there. I don't care if you go to Goldman Sachs. I don't care if you go to BlackRock. I don't care if you go to Morgan Stanley. I don't care if you go to JP Morgan. I don't care where you go. I don't care if you even go to the Fed. If you talk to these top guys, they're all going to talk to you in the same voice, which is, monetary policy, this and that. Or did you see the data from, last quarter? Look, we got right now, the Atlanta Fed just came out with a 5% GDP growth rate. Folks, how many of you have been following me for any length of time? Who said way back in 2022 that if Congress raises the debt ceiling, there will be no recession and it will be a boom? Nobody said that except me. Nobody said that except me. And that's exactly what's going on right now. So, the proof is in the pudding. I've been telling you guys this every single video. I tell you what's going to happen. There's nothing more that I could do. And you don't need anything more from me. Yes, you need, you need the education, the information that I provide. You need maybe the emotional anchor. Very important. People say, "Oh, Mike, let's see your track record." It doesn't matter what look. If my track record was stellar, that's me. It's not you. We're two different people. You could behave in a completely different way than me. If my track record was shit, let's say I never made any money, that still doesn't mean that my ideas are invalid. It just means that I'm a bad, caretaker of myself. I'm operating with bad behaviors, like self-sabotaging behavior. We're different people. This idea, like, give me your track record and I'm gonna follow. You can't. We're different. You have to be you. That doesn't negate the information that I'm providing to you. You incorporate that into you and you work on you. I've said it took me a long, long time in my career. And I was a talented analyst, very talented analyst. I never really made any money. I lost. I was on the 4 different exchanges until I understood, the problem was with me. It wasn't with the methodology. I've said in the past, I have videos, I say, you could literally throw darts at a dartboard and make money. It's about the behavior. Not that I recommend that approach, but you can. And I've said in the past that a moving average system will make money over time, but most people would never stick with it because you're going to have 20 losses in a row and then one big profit and then another 20 losses in a row. Most people will never stick with it, but in the end, over a long period of time, it's going to make money. So it's about self-control. It really is. It's not the methodology. Although I have to say that being informed, having knowledge, mental game, and the ability to go against emotion, to control your emotion, and to go against those who are emotional, those are your most invaluable traits if you can develop those things. Certainly, knowledge and information is off the charts important, as is behavior. So just keep that in mind. Anyway, I'm on your side. And don't think, look, I just put out some more stock recommendations today. That's in my report. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial. See everybody tomorrow. Bye.